Adcock Ingram is South Africa's second largest drug maker and is currently 34.6% held by the Bidvest group. Not sure that they really want to be holding it.
Interesting story, because remember they had that fight with a Chilean company that wanted to buy them. It's a very well-established South African company with great brands, but it's been an underperformer for quite a while. It's now under new management with the quietly held Bidvest stake not really clear. But operationally, it's doing so much better.
9 billion rand in terms of market cap, PE here 22.8, and a dividend yield of just over 2%. You like Ascendus, you like Aspen, do you like Adcock?
So Adcock's an interesting one, because I think the last couple of times we did a show and it was on the pharmaceutical sector, I was always not on Adcock Ingram. But they recently released a trading statement which really changed our view a little bit. I mean, we're not going to go jumping into it straight away, but it seems as if they're getting some of their operational issues sorted out. They're getting some capacity online, which should be supportive of margins. This year, you've also got a stronger rand, so the active ingredient they import is a little bit cheaper, and they just seem to be fixing the business a little bit better. And I mean, off a really undemanding base, there might be some really good potential upside.
Let's look at the share chart, because that will reveal that. You can see it does pick up there. And that is, as Chantal says, because Andrew Hall, the new CEO, and his colleagues have been just doing the business more carefully, looking at operational efficiencies in their production. So some of those brands, just to reduce them, are in the pain area. They're an enormous player with things like Adcodol, Comprel, Panado, and all of that stuff. Carenza C, you know, BioPlus, all this sort of stuff.
I'm a big Panado fan. I have Panado everywhere all the time.
And the kids take those, and I mean, then if you add to that, they've also got quite a nice portfolio of stuff in the nutraceuticals area, Vitathione.
Vitathione is the other thing that people love.
I like that.
In the nutraceuticals.
And citrus soda.
They're huge. So, I mean, if you go into a pharmacy in this country,
and citrus soda as well.
All of that stuff. So, I mean,
Carenza
as
C
you can imagine,
mentioned.
the margins on that are terrific, because, you know, they're well-established, well-supported brands. All they needed to do was get off the flights of fancy in India and all the other things. Will Bidvest strike at this point, or will Bidvest try to sell that stake to someone else? I don't know.
And then obviously, if the minute that they set their intention to sell, if they do, you've got that overhang. Who's going to pick it up?
See, and that's the thing. But my sense is that they've already got that overhang, because when Bidvest unbundled Bidcorp, they said, listen, guys, we are in discussions with each other about how we are going to handle these non-core businesses.
So this is already non-core. They do want to get rid of it, are you saying?
That was kind of the sense that we got. That would be my
sense. And they could either sell it to a trade buyer, like a strategic international organization, or maybe even Aspen. I don't know whether there would be concentration concerns. So it's sort of in play. Yeah. I think it could be an interesting one.
Hot, not?
Yeah, I mean, the valuation is still pretty good. We expect earnings growth to accelerate from year on out, and yeah, it's a tentative hot. We'll see how it goes.
Are we allowing tentative hots?
Yeah, that seems fair.
All right.
I think we can allow it.
And you are?
I'd say hot too. I think it's done what it needed to do, and I don't think that. I think the Bidcorp Bidvest reorganization provided a different context where it becomes a net positive, not a net negative.